So in that scenario, that again would be considered a bare trust arrangement.
That is the most common form
Right.
of bare trust arrangement, and that is probably what most Canadians are not aware of.
Right. It's tax time
My favorite time
of the year.
Who doesn't like paying taxes,
I hate
Amy?
tax time. I'm sorry. I've tried to have energy, but
Do you hate the tax time or do you hate paying the taxes?
both. Actually, both. It's
I
the
love paying
collecting of the
taxes.
slips. It's the whole process of it. It's
Great
not
process.
fun. But here's the good news.
What's up?
We have a special guest, Varun Sehgal from Think Accounting. He's in today to talk a little bit about bare trust. This is this new tax filing, yet again, something new we have to be aware of. And the deadline is at the end of the month, I guess April 2nd. Technically March 30th, but because it's a weekend, it's April 2nd.
Right.
So he's going to explain what it is, who it applies to, and why we should all be talking to our accountants so that we're prepared to file a special new form if it applies to us.
Fun.
Fun times coming up next. Welcome to another episode of today's podcast. We are joined with Varun from Think Accounting. Varun, welcome to our podcast.
Welcome,
Thank
Varun.
you. My pleasure.
Nice to have you in today. So you are in high demand. I was reading an article the other day that said, hug your accountant because they're hard to find.
They are.
And I went, what does that mean? And then I started to think, I'm like, it is hard to find an accountant these days. We get oftentimes our clients will call in asking for recommendations, and we're finding a lot of the people we used to go to are saying, we're not taking on any more at this stage. And I'm
Right.
thinking, oh no, it's like a doctor shortage. What's going on in the accounting world now?
Right.
What's happening?
Right. What's happening is a lot of things. One is just a lot of demand within the industry. And when I say industry, is in the commercial space, so the corporations that have accounting departments built in. They are there's a huge demand there for accountants at various levels.
Right.
Other thing is the exit out of the profession. So as the accountants, like all Canadians
Right.
and North Americans, are getting older, there is a greater amount of accountants who are exiting the profession than who are entering the profession.
Interesting.
And the entry into the profession is curtailed by choice because it is a long journey
Yeah.
to become at least a qualified accountant. So you've got your
Right.
university, then you go through CPA, the hours to get the CPA.
Right.
And even after that, if there's any further specialization you want to do, such as
Right.
make tax your focus.
Right.
There's an in-depth tax program with the CPA body, which is yet another 3 years. So it's kind of like becoming a doctor.
Right. You really got to commit to
So you're
it,
almost
right?
like 10
Yeah.
years into your journey. So a lot of factors there, and that's what has resulted in shortage. At the same time, maybe the last thing I would say to this is even with the existing pool of accountants, we're just all getting really, really busy
Right.
with the new regulations coming out, with the changing dynamics of how a business works today. A business
Right.
today isn't this local shop that sells in Canadian dollars and collects nice little HST and be done with it.
Yeah.
A business today can be selling worldwide,
Yeah.
having to wonder about sales tax rules in Canada, US,
That's
worldwide,
true.
and so
That's
on.
true.
So the world of commerce is getting complex and global.
Yeah.
And as that happens, the expertise of the accountants needs to keep leveling up. So
Right.
and then hence the answer, sorry, I don't have capacity to take on anymore.
Right. Well, I could see that, right? To your point, if you're starting to become in a lot of clients because of e-commerce are global businesses now,
Right.
that is complicated. And you do need to have a lot of training because those tax rules get very complicated. And so I will say the Canadian structure, I find complex too.
Correct.
And why we needed you here this week because we're that new rule that came around bare trust.
Yes.
So I thought maybe we should have you come on and explain what is a bare trust, what is a trust, and why are all of us Canadians scrambling because the deadline is at the end of this month in March. And so this new filing came out and we're getting lots of questions on what is this thing? Does it apply to me? And so who better to have than an accountant that knows all things tax to join us? So
Or we try to get to know all.
yeah.
Yeah.
Well, and that's the thing. It's a little bit unclear, right?
Yes,
So there's a
yes.
lot of kind of, does this apply here or there? And the more reading I've done, it says, well, might not apply.
You just
So
go down a rabbit hole
you
as
do
to who
go-
it applies to, what it applies to, in what context does it apply.
Right.
Yeah, it's a massive rabbit hole.
So first off, what is a bare trust?
Let's even start with what is a trust.
Trust. Right. Good point.
Yeah, because bare trust is a form of a trust.
Trust,
And
yeah.
so a trust is actually not even a legal entity under common law. Under the Income Tax Act, it is treated as an individual, but a trust is essentially a relationship between two or more persons.
Yeah.
It's a fiduciary relationship. Now, who are these persons? Typically, there are three persons in a trust. There's a settlor who contributes something to a trust.
Right.
Let's just say an investment account or real estate property.
Right.
A beneficiary is the person or persons who are intended to benefit from the use of this property.
Right.
And the trustee is this person who, under a normal trust, has the legal obligation and responsibility to carry out the trust in the best interest of the beneficiary. They have control during the existence of the trust. So that's the relationship, like an agency relationship.
Right.
Now, how is a bare trust different from, let's just say, a normal trust?
Right.
The most common form of normal trust is a family trust, let's
Yeah.
say, or even a estate testamentary trust. But bare trust, as it sounds, it's in the name also, it's an informal arrangement.
Right.
Where a normal trust is very formal. You're sitting down with
Yeah, you have
lawyers,
these big
accountants,
trust
long
documents
documents,
and-
binders.
Yeah.
You're putting in $1 or $100 to settle the trust and so on. A bare trust is an informal arrangement entered into between beneficiary and trustee. There could also be a settlor, but generally there's even just two parties to most
Right.
bare trusts.
Right.
With the intention,
Like a mom and dad, or,
Like a mom and dad.
or
Yeah.
mom and child, or something
Yeah.
like that.
And it's bare, BARE. So like it means like bare is in, there's not a whole lot of documents with it,
Right.
right? Like it's just
good point you bring
Informal.
up. The trust in itself doesn't really hold title to
Right,
anything,
right.
unlike another trust.
Got it.
So this form of a trust, the difference is where in a normal trust, the trustee holds the title and rights and obligations. In this bare trust format, the trustee has little to no power. They are at full mercy and instructional guidance of the beneficiary. The beneficiary will guide the trustee as to what to do.
right.
All the trustee is doing in this relationship is holding the legal title.
Right.
So to simplify it, or to give some common examples, what could be an example of this? Like you said, Jalal, one form could be a parent or a grandparent opened a bank account or an investment account for a minor.
Right.
And all they're doing is they're holding it in trust for the
Right.
minor. They
Right.
have the legal ownership because, let's say, the minor is not able to open the account, but it other than that, the trustee or the parent has no role.
Right. So in my example, I've got two little kids, right?
Yeah.
I have bank accounts for them. They've
Yeah.
gone to the bank and done the little thing and opened the account.
Yep.
But obviously I'm the
Yes.
the age of majority. I'm the responsible one over the account.
Yes.
That would be considered a bare trust.
That would be considered a bare trust.
Yeah.
We'll come to a couple of exceptions there
Right.
too. But the most common one I did want to bring up today is in this mortgage environment that we've been in last couple of years, what has become very common is for a parent or whoever with a high net worth having to come on board of the mortgage
Right.
with what they typically say 1% title.
Right.
And on the mortgage and the title, so that, let's say, the kids, a young couple, for example, could get the mortgage, could afford to buy the house.
Right.
In the absence of this person, they wouldn't have gotten the mortgage.
Actually, that's a really good point. We've seen a lot of that over the last little bit, right? Parents are making these gifts to kids to help fund
Yes.
the property. And part of the mortgage conditions is the parents have to be on title.
Yes.
So in that scenario, that again would be considered
That
a bare
is-
trust arrangement.
That is the most common form
Right.
of bare trust arrangement, and that is probably what most Canadians are not aware of.
Right. Right.
The other example can be elderly parents, grandparents, whatever.
Yeah.
Elderly people, at later years, they end up adding kids to the title of the property.
Right.
Um,
or on bank accounts
or
and
on
things
bank
like
accounts,
that. Yeah.
etc. And I will again. So let's say that's a very common example.
Yep.
Now, it does become important to distinguish, and that's where talking to the accountant, or honestly, even more and more guidance that will be
Right.
put out by CRA. What becomes important to establish is there really an agency relationship?
Yeah.
Is it really just a name on a bank account, or the trustee, like whoever's on the title, are really doing or carrying out certain activities on behalf of the beneficiary as their trustee by instructions from them,
Right.
or they're just they don't even know, they're lying flat, like they're in the background somewhere. And so
Sorry, when you say agency in this context, what do you mean?
Yes.
Is there an actual agency between the parties?
agency is a relationship whereby, let's say, Jalal, I give you the agency or the permission. Hey, Jalal, you're going to be on the title.
Yeah.
I'm the beneficiary. So we're going to define all this in a legal document. You are going to carry out what I tell you, you will carry out those instructions. I say fill out this form with the bank and sign it as a legal signatory, you will, but behind the scene, it's only me. Another example of this, it's very common in the real estate industry, real estate development, whereby one entity for privacy purposes will hold the title to a real estate. Let's say somebody wants to buy 5 buildings in a row on one street.
Right.
But they don't want this to become public knowledge in applications and whatnot.
Right.
So they'll create a separate corporation or corporations
Like an entity right.
simply to hold the legal title. But behind the scenes, whether it's JV partnerships or LPs, they are the ones who are really beneficiary and instructing all this to happen.
Right.
It's just on paper, it's just one person or entity. So the trustee doesn't even have to be a person. It can be a corporation as well.
Right. Right.
So that's by agency.
what
I
you
mean,
mean
it's
by
not
it.
a
Okay.
it's not a social media agency or a
Yeah,
company
yeah.
or anything.
Yeah.
It's that relationship of you acting as an agent for the beneficiary, or the
Right.
trustee
Okay.
acting as
Yeah,
an
yeah.
agent
Right,
for
right.
the beneficiary.
So in this scenario where you have elderly parents that have their kids, their adult kids on, and maybe the kids are paying the hydro bill and that
Yes.
sort of stuff, is that considered a bare trust arrangement?
So you're saying the elderly parents own the house,
Yes.
the kids are on the title, and they are paying for these items?
No,
Or-
let's say in the simple case of a bank account.
Yes.
Say they have a bank account with
Yep.
their parents.
Yep.
And then the kids are put jointly on the bank account to help mom and dad pay for bills and things like
Yes,
that.
yes.
Would that be considered a bare
That would be
trust?
considered,
Okay.
because now they are really
Now they're
basically
acting.
they're acting as a trustee
Right.
for the parents using the money or the account,
Right,
which
right.
is the object of the trust.
Right.
Now, maybe now I can bring up that exception of
Right.
there's one little exception here, whereby if the only assets in this bare trust relationship are cash and liquid investments,
Okay.
and that amount is below 50,000,
Right.
that is exempt from doing a bare trust return.
So because my kid's birthday money hasn't amounted to 50,000, I'm good.
You are good. You're good. Exactly. Otherwise, that if it's more than 50,000, and it's the same thing that we talked about,
Right.
then you're subject to the
Okay.
return.
Okay. So I'm in the clear now, but I know we have a lot of clients that are not in the clear in this scenario.
Yep.
So my question is, why is CRA doing this? Like what like another form, and it's not an easy form. It's my understanding. It's not a simple form. Like there's a lot of stuff on the form that might not even apply and you have to go through it. And this is where we're getting a lot of questions and having to call accountants.
Yeah.
Why is CRA doing this? What do they want?
We don't know exactly, of course.
Yeah.
But I
just
think
got out of
I
COVID.
think my opinion is they want to tax me more. So I don't know.
if you follow the pattern of the last few years, the compliance rules and requirements have
Right.
only kept on getting more and more and more complex,
Right.
and just more reporting requirement.
Right.
One recent example being the UHT, the underused housing tax return, which was in the news for so long and is still in the news.
Right.
The requirements were so critical or so rigorous, actually,
Yeah.
to the point that at the end, CRA had to back out, where initially they were going to subject all Canadians who owned residential or even commercial real estate under a partnership or joint venture. They had to do a UHT return. Ultimately, they said no, it's only non-residents and partnerships, etc., but not regular Canadians. So the trend there was, I think what the government again wants is more transparency, more data, essentially. So
Right.
to your point, maybe they want more data at this point,
Yeah.
and then they'll figure out in future budgets. Okay,
Right. How can we?
if I pull this lever and increase the tax here by a little bit, then this is what my revenue will be.
Right,
So again,
right.
we can only speculate here.
Right.
But I think they're definitely with the government's deficit just going only in one direction,
Right.
and the it becomes a deeper topic, like
Right,
Canadian
right.
Canadian
We'll
per
have to
capita
have you
income.
come back for that
Yeah.
one.
It's to your point, it's a rabbit hole we can just keep
Right,
on going
right.
into.
Yeah.
But I feel it's more data at this time with possibly eventually
Yeah.
more taxation, keeping Canadians really not only on their toes, but I think this is what is worrisome for Canadians who even accountants are finding hard to keep up with the new rules,
Right.
keep up to date with the compliance obligations. How are normal Canadians expected to keep up with it?
Right.
If you want, I can quickly touch on the penalties for non-compliance.
I was gonna
We were
say.
just gonna ask,
I was just
actually.
gonna say.
That's one of my
So
questions.
some might think, why bother filling it out?
Yes,
But
yes.
there's penalties.
Yes.
So
That
you
was one of
want
my
to be
questions.
compliant, and you want to make sure you're talking to your accountant, you're filling it out properly, because
Yes.
there are penalties if CRA comes to find out that you have one of these arrangements in place and you haven't declared it.
Correct. And I will answer that right after I answer your previous question, which is it's not a simple return. And I
Right.
know you use the word form, which really, if you look up anything around Bear Trust T3, T3 is a form of a return.
Yeah.
The main information is on this one schedule of the return, Schedule 15, where
Yeah.
you're reporting name, date of birth, SIN, and address of trustee, settler, and beneficiaries. But CRA has made it very clear we don't want just this form. So an average Canadian cannot just fill out these four little details about
Right.
the trustee, beneficiary, etc., which would have been easy for them, right?
Right.
It's like filling out any other
Yeah.
form. CRA made it clear, no, we don't want just that form. We want you to do this whole T3 trust return.
Right.
And Schedule 15 is only a part of that. That's where the average Canadian will lose it in the sense they won't have the competency to do it.
Right.
Does TurboTax have it? I don't even know. We don't
Yeah,
use
yeah.
TurboTax in our we don't use TurboTax in
Yeah.
our firm, but like we use a commercial grade
Yeah.
tax software.
Yeah.
And so is it a very complicated return for an accountant, a CPA? No. The first couple of times
Right,
you just
right.
figure out it's a new
But
return.
Varun, in all honesty, you've been doing this for over 20 years, so it's probably not complicated for you. But for someone like myself who doesn't do my own taxes, and if I'm
it is-
subject to this, I'm not going to really know where to start.
Exactly. And you won't know where to start. And let's say you've kind of heard it in the news and you're not sure what to do. And let's come to that question of penalties.
Yeah.
So earlier on, and this is still the case, the penalty for non-compliance is $25 per day up to a max of $2,500 for a unfiled T3 return.
Right.
This is where it started, and I'll come to even a potentially even more penalty. Luckily, with some intervention by CPA body and even a lot of accountants, CRA very recently, they first came out late 2023, and very recently, as recent as this week, they've clarified that for the fiscal year or for the calendar year 2023,
Yep.
they will not charge a penalty if it is filed late. Now, what is the deadline for any trust return? The deadline is 90 days from December 31st.
Right.
Which would have been March 30th, which is on the weekend this year. So that deadline is April 2nd. That is still the deadline. The deadline hasn't shifted.
Right.
But for 2023, at least, CRA will waive any penalties as long as, and now this is where the
Right.
second half of it comes on, as long as they term it as long as it's not egregious. It's like very manipulative or purposely you're just
Right.
putting together a scheme and you're purposely not filing.
Right.
So I don't know how exactly they'll determine that. There's no further
Right.
clarification. But if they do an audit later on, they find something like that,
Yeah.
then they can charge the penalty. But even otherwise, the penalty is actually the higher of $2,500 or 5% of the value of assets held under the Bear Trust or in the relationship. Now imagine,
Ouch.
Wow.
imagine a $2 million property
Right.
in this Bear Trust relationship,
Yeah.
and you don't file, and it's determined that, well, you knew you had to file, you
did it
purposely didn't file,
In bad faith or like
Yeah.
for
5%, 2 million, 100,000. So it's not 2,500. It could be a lot more. By
Right.
the way, and again, I think I did say that, but I just want to repeat that this, call it waiver of not charging the penalty, it's only for 2023.
Right. Right.
So things will
Yeah.
go back to normal.
Yeah.
The last thing I would say to this
Which
is,
sounds like they're giving the accountants a little bit of grace period, because it's
Yeah.
like clients call, but we don't have the capacity to get all of these things done because this is brand new. We haven't maybe tooled up our teams to take in all the additional input. So they're going to give you a little buffer, but equally, you got to make sure you're still filing it.
and exactly, and just like last year and the year before, but especially last year when the UHG rules came in and they were thrown in right in the middle of tax season, well, that's exactly the same thing that's happened. So to your point, that's where hopefully the thought process went, that we're bringing these new rules and there's lack of clarity around the new rules, but the
Right.
deadline is right smack in the middle of the
Right.
tax season.
Right.
So perhaps that's the rationale,
Right.
which gives not just the time to file, but gives the time for average Canadians to educate themselves,
Yeah.
for CRA to put out more material, more FAQs, which is what
Right.
they did with UHD. They've come up after that with a lot of very specific
Right.
FAQ, like scenario type examples. So I'm hoping as the year goes on, they'll talk about things like, is joint account, like today, up to today, there's no very specific guidance. Is a joint bank account
Right.
with parents, etc., is it really a bare trust or not?
Right.
From what I've read, again, where there is that agency relationship, you're acting on behalf of the other, you're
Right,
conducting
right.
activities on behalf of the other. The general feeling in the community is, the accounting CPA community is, that does form a bare trust.
Right,
But
right.
we're all doing our best educated guess at this time.
Right.
Right.
So moral of the story is hug your accountant, coming back to that, because it is complex. And of course, everybody's situation is completely unique. So you really should be speaking with a tax specialist. Today, we've covered off some generalizations just
That's
to
right.
give people an idea.
Yeah.
But everybody's situation is unique and different. So you really have to get that expertise and look at your specific situation to make sure that you understand what it is, and it's probably here to stay. So let's figure out if it applies to you and be compliant.
Just like perfect caveat.
Yeah.
I couldn't have said it better myself. Yeah.
But we have to have my disclaimer hat. But yeah.
Go ahead, Jalal.
I just wanted to ask a couple of questions. One is quickly about bare trust, and the other one's completely off topic
Sure.
with CRA, but off bare trust. First one is, what are some misconceptions you foresee, or like what are some things you'd want listeners or viewers or just Canadian citizens or any tax-paying individual to know right now about bare trusts? Like, in your opinion, what are some misconceptions you see or would want to know?
A misconception.
Yeah.
Misconception can basically be lack of understanding of this. I'll even use that as a very specific example of somebody in our firm who was casually asking, "Oh, my dad is on the title with me, 1%, had to get the mortgage." Now, this is somebody who is in an accounting firm and not like having to dig into the rules,
Right.
and so the misconception here really can be not knowing what you don't know.
Right.
It can be bare trust. Nobody, like family trust, bare trust. This is for
Yeah.
the rich people, and this
Yeah,
is for
yeah,
the
yeah.
multimillionaires, etc.
Yeah.
It doesn't apply to me.
Right.
Yeah, and until it does, and
Right.
then that's when So maybe that can be it. That we can hear, like any other news. It's news until it applies to us, right?
Right.
Yeah.
So that can be it.
Well, final question is, and this is a little bit off topic from bare trust, like I said, but why is the Canadian Uncle Sam after us? I read the other day that CRA is cracking down on writing off vehicles in your house this year. Like, apparently it's like a huge thing. What
But
is
you
going
touched
on?
on it. Look at the debt we have,
Yes.
right?
So-
So there's one thing when we do financial plans that we can always guarantee is your tax expense is going higher. Like, we just know that is always going to happen. So
Yeah.
be prepared.
We're supposed to save money but with investments.
I wish I had any different
Yeah.
answer than what you said. It is. I think we.
CRA just always wants to come knocking.
Yeah.
Let us live.
Yep. From speaking on behalf of CPAs, maybe the complexities of CRA keeps us employed and keeps us
There you
in
go.
the business.
There you go.
But at the same
I
time,
think it shows the importance of working with an accountant, in
Oh,
all
absolutely.
honestly, because in keeping up with all of these little things, there are certain incentives that the government puts out that they want us to take advantage of. But if you don't know and you're just doing it yourself, sometimes you don't know, you're not taking advantage of those other things that they give you
Agreed, yeah,
too.
agreed,
So
yeah.
I've found that over the years too, that I'm very happy to work with an accountant because it makes a difference.
Exactly. If you have the attitude, I don't want to cheat and lie and evade taxes,
Yeah.
but I want to do what I can to plan better
Right.
and save taxes.
Yeah.
Then there are opportunities. And
Absolutely.
again, there's specific cases and specific opportunities. But at the same time, I think tax planning is more important than ever today.
Agreed.
The structures are getting more complex.
Yeah.
The rules are getting more complex. New rules coming up every year, and all we can do as accountants is keep up with it and find out the specific situations of our clients and advise them accordingly.
That's awesome. Well, thanks again, Varun. And again, it's Think Accounting, and you actually have a blog, so we're going to link your blog in our post as well.
Sure.
Maybe we'll link it to the specific topic for today, but it's a great blog to follow for all things tax and keeping us abreast of all the new changes that keep cropping up on us. So, and thanks for joining us during your busy season. We know it's crazy for you guys, so thanks again, and happy tax season, everyone.
My pleasure. It's been great. Thank you.
Thanks. Till next time.